Hello and welcome. It is the 10th day of May 2019. Not much to go over, therefore, what I will is take a look at Bitcoin. Its status mode, now what question mark? That's a new status mode. Last status mode was en route via that to there of 6,341. Right now it's at 6,350. So it's at that number. So now that it's accomplished previous status, try to figure it out. Well, it's going to be one of the two things. It's either going to be it's en route down to 4,850, or and most likely lower, or it's en route to a break noticeably above 9,800. But how am I to tell now? In fact, if anything, it's still en route of piercing above this number, which it literally has done. Today's intraday high, 6,430. Okay, what kind of early signs can I get? And this looks like a funny line now, a little reddish, if you will. It's black and green put together. Because this horizontal ray is black, current price action always comes in that of green. Yeah, that's what it is. So it comes up to appears below at the 2300-hour timestamp yesterday. Then it goes sideways for a few periods. Then it pierces even closer, not quite there. This high came in at 6,337. And then it has several hours where it really grinds lower. And then from 11 a.m. today to that of 1400 hours or 2 p.m., it went up above it. A little bit of a move below, but now quickly back in there, so still no signs yet. To me, if this is going to be any level of significant resistance. Last time, let's take a look back at the hourly time frame for how it looked before. And the Fibonacci line before the big resistance is not shown here. This is the Bitstamp exchange. But the price action, of course, had this fast move that managed to get above it. So on one period, it went from the doldrums and, well, 11.85% in 1 hour, when previous hours were zero point 0.2 and zero point 0.3 and zero point 0.2 and zero point 0.2 and nothing and zero point 0.1 and 0.13. Yeah. So volatility went from nothing to more than something. And then it had its move. So here the question was, okay, now what are we going to do? And you don't know that here at this point because it's still newly in towards that situation. And some time goes by. Okay, well you're resisting it. Okay, okay. Well, just because you're above it doesn't count out the fact it's going to be resistance. Because oftentimes when it is on the long term, it's going to have some fun diddling and dandling and whatevering around that number for many periods when you look at it on the 60-minute and 30-minute, all that type of stuff. But with the daily and weekly charts, when you look at it months and years after the fact, it's just one whatever quick line that gets there. Did we see the settings on there? Well, at this point, it's still possible. But what had occurred was okay, it was establishing this twice hit level of resistance because it has a big pierce above that line. That's normal. And you're now trying to adjust the message of the market, try to figure it at this point. Okay, are we going to 63? Or are we going back down to this level here? And of course, it ended up going higher. But let me just try and find a way to delete the drawings, and I figured out how. But as it went on, it was holding and staying above it. Okay, this is interesting. It still only has been from this point. It was April 2nd to early in the day, like very early at 1. Next thing you know, it's a day and a half later and it's not showing much resistance. Okay, here we are. Here's the test. If it's I mean, it can go up, make a lower high, matching high, but I mean, if it breaks down below this, yeah, it's resistance. Okay, so there we have it. Lots of support here, twice hit. And we were getting indications early at this point, several days after the fact, that okay, the setup was looking very bullish. And The break above here, if it were to happen fast, oh, it didn't happen, but if it were to break above this relatively quick, after something like this, then you'd expect a fast move to the level. And holding these areas, if you could see what's able to do it, which of course it did, gave you a big indication for that as well. And lots of holding in it in here. Okay, so bouncing above it, still nothing above this level of resistance. But as every hour goes by, ooh, the likelihood now of it actually having moved to the resistance or up to that 63 change mark now was looking pretty good. And this was back at 51.27. And it was just, and now several more periods, and it was, okay, this is interesting, making all these higher lows and then the retest of the resistance, because this here already got above this one in here. It showed what was a possible original failed breakout, so it didn't get going here. That's fine. It was early. It had its big correctionary move that it oftentimes is going to need after this type of accelerated gain. So now the break above this is what you're looking for. And when you can do it with a lot of periods, show stuff like this. Okay, a trend line of the such. Any of the bullish type of things that you normally see for a setup. If you see any or some of them, then yeah, it's probably going to have that fast move. But it's got to break above. Okay, well, you're waiting, and here we have it. Okay, but I mean that really wasn't much of a break. That kind of didn't count. If you got in there, careful with your stop. Okay, if you got stopped out, whatever. But it had a decent amount of time on it. A lot of time goes by, and there we have it. That's that clear break. Now we knew back here, April the 24th, which was then a few days after the fact, that this thing was en route to it. Probably should only take like about 3 4 days or so, but you've gotten by that. I was trying to get a drawing tool there because I wanted to draw a line in here indicating, of course, that where at this moment you'd be looking at it, you're supporting this level, the huge sign of strength, and oh, it went down. Okay. Of course, again, you throw in that Bitfinex news, but look how it recovered it. Okay, a lot of stops might have got shaken out. So be it. That's how the game is played. You have this typical, and this is just one of those big failed breakdowns, which we'll, I guess, get to in a little bit because, well, long term we're there as well too. But after the fact, and after everything that's went down, markets does what's markets do. And notice after this failed move, fast move, it's over. You look for something like an inverted head and shoulders pattern. It does its thing, it's over because it makes its move. So you have this failed breakdown. You break a key level of support. So you have the trend line that breaks. You have this last key level that broke. It after hitting that low, which is pretty much the low, although it could pierce a little bit later after it, whatever on that. But it does this, just goes sideways at that area for a bit. Then it rebounds quickly to that previous congestion area, which technically speaking was sort of because it went to the neckline, but it took forever because normally it goes to congestion area, which is actually here. But what it did do is it went to the neckline of this point in here. It stayed there for a while in the same sort of realm though. And then after that, failed move, fast move higher. It might not be over the fast move, but what we expect on a break of this resistance, I'd be saying at least somewhere around here, so it's done at least that. And that means on the long term, oftentimes from failed moves can create fast moves in the opposite direction. Current price action has a little bit of key Fibonacci significance where I draw this line. Let's draw this in here. Previous congestion area is roughly around in here. So in a failed move like this, I mean, I showed you an example where it consolidated below it. Okay, so that like, but normally when I see that failed move, it breaks a key level, and boy, was this ever overwhelmingly was this a key level. And then it does that. It's a Bart head shape, Bart Simpson shape formation of a head. So you have a neck of something, and then you draw the head. You got the up part, and then down like that, or whatever. So this is the up the head. And of course, this is an inverted pattern of it. So the this would be for a failed breakout, and of course, inverted is a failed breakdown. And it's a dysfunctional right side of the head because of how slow it took to do it. First, there was all of this. That took a long time. And then this sideways consolidation, it managed to get it down there. Not, I mean, the downside, it was, I guess, more normal. But as it is, that's still what the pattern kind of shows. So if this can accelerate more and we start to see within this now what situation that it's not able to get anywhere near that next key target level of 10,000 on the upside, but it does manage to get up to about like the 7,300, even 7,000 even. Definitely holding and staying above 6,000 and testing in the high 6,000s counts as congestion because yeah, it's 68, 66. Those were key levels to say the least. If you see it holding and staying in this level, and really holding and staying above, really for what it's worth, even 5,600, 5,700 for a good significant amount of times, at least, oh, well, 2, 3 periods on here. That would take us to like middle of the summer, middle of August. If it can hold and stay it over the next like 9, 10, 12, 13 weeks, then yeah, that's pretty big. And as far as an upside target for a fast move, well, 10,000 would be a conservative level. And up towards here is where I would be expecting the next move to work up towards. Meanwhile, the weekly chart on the Bitcoin dominance, which is BTC.D on the trading view, this indicates of the crypto market cap, what percentage of it is Bitcoin. And right now it's 61 and a quarter percent. Interesting pattern because you establish this level of resistance in at 61.20, it looks like. So now it's a matching level. This high is 61.39. It's up by 0.19. And it's technically zero point zero 0.04 above that number now. As far as I'm concerned, it's the exact same. If it's close enough, that is. But this doesn't show me major overextendedness, really. In fact, as I'd be looking at it in technical analysis, the way I do it, you have established a key point high, which is where the green line is. You have a great correction, which is what this is. So, in such, in leaving the 18, I would be expecting a move to be, well, my target level would be 61.2 divided by about 52 to the root of 1.618 multiply 52. Somewhere around 66. So let's see what that number is. If this works, I mean, that's sick. What correction low do I want to use here? This low is 52.73. This one is 52 and a quarter. And this one is 51.43. I gotta go with the 51.43. It was the original move, and everything stayed within that range for that long period of time. Okay, let's do this again differently. Was it 51.43? It was. I should have just went with it. I was just going to type it in because I was like, well, first I thought I was like 80% sure, then I wasn't sure about that. 68.14%. So just for something to do, I mean, obviously everybody's calculating this number, so I mean it's just going to hit, and that's just, I mean, because everybody sees it, it becomes a self-fulfilling prophecy. That's what I'm trying to say, because every single trader looking at this knows that within this high, this correctionary phase, breaking this level of resistance that it's attempting to do right now, gives us a price objective to 68.14, which is a coincide to this high here of 69.69, which works out because, I'm not going to say oftentimes these numbers pierce extra. It's just altcoins against Bitcoin and Bitcoin against the dollar does, though. But what I'm trying to say here is this isn't overextended because if I'm seeing it leave here, yeah, I'm expecting it to go there. Now, short term, yeah, it wouldn't be a surprise if it stops going up here. Maybe we see some red down moves, meet up with the 18 and all that along the way. This is that spot I hate to try to predict. When we've had this key high, this key low, it's exactly where this high is. It has had a big run to get to that point, which usually is the case. This one, no exception. So I'm not trying to predict where it goes, but I'm just saying that it's not all that overextended. When looking at this on the daily term, boy, is it really. I mean, it's just been going straight up. Bitcoin is going higher, obviously. A couple $100 up this day, $400 up that day. It's been up now over double since its lows at the start of the year, end of the year, whenever that was at 31. It's back to where it came from, where many people were waiting all last year, where it's in that 6,000 range, up 50% from many days ago, 30% from just many hours ago, and that's just the way it is. And other altcoins, well, a lot of them are down against the dollar by smaller amounts. Take name a coin, NMC. It's getting its ass kicked. Today's session closed with a down move of 46 and 4/9 of a percent. Just your standard. Okay, it was in a bear market. I mean, the 18 average was obviously declining and it goes down. And it's now at levels not seen since ever. We'll see how it goes moving forward. In cryptos, you get some monstrous volatile moves. DGB, Gigabyte, 400 up here, 164 right now. And at the bottom of this chart, at lows not seen in view sight here. And well, it's been a downtrend. It was about 700 last summer. And okay, well, those, and it was over 800 here, and it was over 2,500 before. We're at levels from where it was lifting off from in 2017. As far as where we'd be expecting a leg lower, where was key support? Obviously here. To me, there's no denying this level. So what's a key leg? Break below. Well, I guess it's better to not look at the numbers before that, but I'd say it's at the early stages now. This is the conservative level, roughly at around 156. Previous low in here. Next possible level, you're looking at the even 100 number. Obviously, it could pierce below that like it did here. It's a possibility. But if you're just looking for a key break low from this point, it's where it is. And looking at DGB against the dollar, well, it's a little bit of a different story. And when I say a little bit, I actually mean a lot. For on its daily chart, we got a coin that's about a penny, 1.06 cents. It was at 1 2/3 of a cent many weeks ago. Earlier, at the earlier part of the year and end of last year, we were 8.3 cents down in here, a little under 8 cents. And when we scroll back in here, this was more expensive. It was 4 cents here. At the 2018 highs, it managed to get over a dime. 2018 lows, well, we're close to that level now at about 6 2/3 of a penny. And the 2017 lows is at 0.00019 or so in dollars. That's DGB. Litecoin, at one point back here in 2017, it was about $4. And then it rallied quickly up to 35s, back down to about 17, making some higher highs and higher low moves up to about 83, down to about 34, and getting itself right back to the congestion area of like 46.50, then just going huge up to about 400. And it was consistently going down lower highs, lower lows to about 20, little over 20, and has now been just been going up, and well, it's gotten up close to 100. Currently settling in at 77. Tops and bottoms are known after the fact, so whether this is going to be the high, I don't know yet. 4, if this starts to roll over and go down, yes, it is. If this is a successful correctionary move, and when you see indications of price holding and staying above this level that it has resisted established, and you see it holding in the mid 80s high, holding that area, which means it's supporting in it. Price action might be going up to 88, back down to 82 in a day, and that's just strong indication. And then when it breaks above it, you're going to be like, nope, that's not a key high. Sort of like before when it was going up. You would let me just see a little bit better in here. Like even situation here, like okay, this is a high here at $12.92. Comes back down. Nope, nope, not a high because we broke it, and so on and so forth. But now let's take a look at less candles, examine things a little more clearly as far as where this lies on the short term, long term, whatever. Well, look more long term. We've seen more long term with looking at all those candles. But as this is presenting itself, since this low, which did not go to Fibonacci, Fibonacci missed really more than anything, which doesn't happen too often. I'm going to self admit it that it's more accurate than randomness should be, how those numbers work. And I was even thinking earlier today, mathematically speaking, and being real to the fact that Fibonacci numbers are not looked by other people, at least not calculated, and the measures in which I do, high divided by low to the exponent of the decimal Fibonacci number multiply low. See, they do high subtract low, multiply the Fibonacci decimal per number, and then they add that to the low. That doesn't cut it to me. I mean, if you're talking about something like a retracement, like, oh, the stock went from 122 to 117, it'll work. But if it goes from 122 to 17, it won't work. Okay. All right, back to the business here. So yeah, didn't hit Fibonacci, whatever. I got this 18 in here, or the 18 average doing its thing. It oftentimes for failed moves brings fast moves to the upside. Again, not one of them. Maybe I shouldn't say often anymore, but it did broke this little move in here that broke down below the support to me as a failed breakdown. It recaptured it back to this congestion area, but it's just hanging in there, not doing much at all. It had an opportunity to get above this 18 average highs on the 3rd of May. Well, it did, and then okay, so it hung in there with a pause day on a new high. That's productive. Okay, so we come back down. Okay, that's fine. Correctionary move. How many do you need? Well, apparently four more. One, two, three, four. But hanging in there, staying within the 18, showing that it hasn't failed its test of correction. And it closes today's session at the 18 average of highs. And if it's able to hold and stay above 75.64 over the next 2 days, which would be Saturday and Sunday through the weekend, the 18 average of lows will mathematically have no choice but to start to rise at a most noticeable rate. And we would also, again, that's a nice bullish little setup, yada yada, for stuff like that. But getting above this does seem as if it wouldn't be a surprise if it were to do something around that nature in there. And I didn't think this 100 level was going to be much resistance at all. That is, no matter how this plays out from here on in, is going to be wrong, because if the weekly time frame is going to have a move that goes like $2 below it, have three noticeable reds down, a pause green from that point. This week is almost done, so even if it ends the week with a gain of like 15 extra dollars, it's just going to get back to this level. But what I'm basically saying is any fast move that were to break this, it's going to make it noticeable years from the future moving forward, that yeah, back in 2019 in April that came up to it, pulled back in here, and then after that, and then of course we'll talk about what happened at the rest of the year. And what's most likely going to happen for the rest of the year into 2020 and so on is continued volatility, markets going up and markets going down. Big rates of percentage move. Problem with these markets to me is the real tangible supply versus demand in the tangible level. the supply is too low to handle the demand. And this is a good problem because what that means is the price movements going up and down are going to occur at that much of a larger rate of ascent for both the up and the downside. And let's bring Neo up talking about that. This coin was 11 cents, managed to make it up to about 180. Now back down to 8 and 8 ninths, 8.888. Volatility, supply and demand. Well, supply are those people who literally have buy and sell orders on the exchange that have not been filled, that are waiting for people to take them. Demand are the takers. They're the ones that take people's buy and sell orders and they fill them, or at least they partially fill some of them. And with exchanges having the problems in which they do, and just the knowledge of knowing I can keep my coins on hardware wallets, and when there's a time for me to sell, I'll do it. I'll just trade at market price. And I'm now pretty much one of those for many markets myself. So that means that the price increases are going to be much larger. And when we think about this on a mechanism, at least when I think about this on a mechanism like for stocks and the traditional stock market, when you got big banks that are pretty much controlling the order books, well, technically speaking, if you get your buy orders and control the spread, basically, that's profitable in itself. But when you control the spread, then you'd have the opposite effect. So in here you have spots where markets go up 72,452 times, and then they go down 4,861 times. And yes, I'm being sarcastic, but okay, well let's get literal. Point one up. That's a 1,800 gain, or what 1,500 times gain. When you have the opposite effect, it's like, okay, oh my goodness, this whatever stock just rose 6% this year. And the big day is a 0.6% up day. Because if you want to buy or sell a market like 1% on either side, it's going to take a lot of funds. And a lot of these markets don't. Especially the smaller markets. But even then, if you want to say buy something like Neo, and you're somewhat of a serious buyer, at least you got what I consider a serious enough number. You're like, okay, I want to put in, and when I say serious, I mean it's the lowest number I can get to be serious. And I'm trying to think of that now, and the number I got in my head is like half a million to three quarters of a million. If you're trying to put that into Google and Apple, that's just whatever. That's child's play. That's not going to do much. Oh, you want to move it at about like 4 basis points or 7 basis points compared to two? Yeah, that's nothing. Yet here you're like, okay, I want to buy or sell that much, and you buy it. Next thing you know, it's 889, and you're gonna have you find it. Oh my goodness, especially on one exchange. But you're figuring out how am I going to buy this up and have the price stay below 940, 950. Maybe I'm wrong on that with three quarters of a million. Right off the bat, if you were to spend $750,000 on the exchange's point of view, and this is, I'm going to finish it off within this topic. I'm going to bring my calculator up. Okay, of course it goes full screen. There we go. 750. If we multiply this by 0.001, that's 1/10 of 1%. That would be $750 to trade. Now, if you're playing three quarters of a million here, there, and whatever, rake fees of 750 really aren't going to change your game too much. But when you talk about like $10 and $20 market trades that the stock market offers, there's a big difference because if you want to trade a $500,000 on one stock and you pay $20, that's hardly a fee at all now. Yet, if we look at, say, I want to get into Neo and I want to put $50 into it. Okay, well, at $50, you're going to get about, looks like maybe six of them. But as far as how much you're going to be paying in rake, about 5 cents. And that's what's the beauty part about the stakes that you can play on the crypto. Now, if you're just playing or whatever, because to me, when I looked at the stock market, I'm thinking, okay, if I'm doing $20 trades, we'll say, on $4,000, well, that's a half a percent. And I'm thinking, man, just a single buy and sell has to be like $4, $5, $6,000 minimum trade. And I realized that, well, everyday players, there's not many options available because that's an expensive option. But if you want to do, like, say, a $5,700 trade on crypto space, well, it's $5.75. So even at those stakes, it's like, man, whatever. I think it's handleable, to say the least. On Bittrex, it's 2.5 times higher, so you'll be looking somewhere a little under $15 on a $5,750 trade. But if you want to do like a $200 trade on the stock market and you're paying $20 to make the trade, well, I hope you got a big enough gain because I always was annoyed that the stock market had such high fees for making it. Yet it really is a volume number game. And with a lot of these markets, even though you see that maybe the supply and the bid and ask is, well, as you see it on the order books, because people know that they're gonna, even on the low, like zero, even like 0.07%, whatever, that when they're making $1 million, $2 million trades at one time, that they still don't want to pay that price. So that comes into things like over the counter trades, and that just changes the supply and demand even more so. But the whole point of me saying this is the volatility is to me showing no signs of going anywhere. And within the Bitcoin dominance, maybe, I'm not saying it is, but maybe this is a case where it's a delayed situation. Money gets put into Bitcoin, and then shortly after that, the next few days and weeks, maybe even months, there's a rise that goes into the altcoins. And a lot of it could be Bitcoin bought today, this week, gets put into altcoins next week and next month. I'm not saying it will, but it lends the opportunity to. And I really like seeing altcoins decline like this when Bitcoin goes up. It's a lot better than when Bitcoin goes down. And it's days where, oh, Bitcoin's down 8%, Neo's down 15%, this altcoin's down 20. Yep, Bitcoin's down 8 and almost every other coin, but this one, that one, and the other one are doing worse. Thank you for tuning in and have yourself a great day. Bye bye.